What's up, guys? This is going to be the trade recap for April the 7th. So this trade recap, actually, we did not take the trade. This is just a recap over what happened. This was actually a prediction trade. I didn't have time to get into the entry, and I'll get really into that by the end of this video. Especially, stay tuned for the next video because it's coming out right after the recording of this one. I plan on uploading 2 videos today. So just FYI. Sorry. That's the trade that I took. So I'll mark it out right now for you guys. Basically show you what all happened and my thought processes. All right. So today I thought it was an easy put day today. I didn't really have a bullish bias. So we can go into how we played the trade. This trade execute was flawless. I mean, everything about it was textbook. It was paper. It was one of those trades to me where I could have high leveraged it, but I ultimately decided not to. I'll get into that. So what do we do? Marked out our 1 hour draw on liquidity that we're looking to target. I'm looking to target lows today only because I saw that when the Trump news came out, I thought that we were going to go a little bit lower and we're going to follow that trend. But ultimately, it was because of the 1 hour for value gap that was getting filled during pre-market. So I'll mark that out for you guys right now. So boom, that's a 1 hour for value gap during pre-market. If I can mark that out better. Yeah, that's a better mark out. So what happened? So let's scroll down to the 15-minute time frame so I can show you guys what happened. Over here, we get a filament of the fair value gap. All right. So filament of the fair value gap, that's cool. And we're filling it in during pre-market. And I'm kind of thinking to myself, all right, well, I got to look for a reversal. I got to look for a change of trend to target anything lower than this. So we're going to hop in on the 5-minute. And the 5-minute is really where everything ultimately took place. Now, I wonder, you guys might be wondering what you're thinking, right? We want to wait for the retracement, but actually in this position, I did a higher bias targeting. Let me pull up my screenshot right now so I can mark it out exactly, like all my levels that I hit today. All right. Yeah. So I forgot to show you guys. We had in that 1 hour fair value gap, we also had a 1 hour equilibrium that I can show you. So we obviously know that for value gaps, when they get respected, is really strong. But when equilibrium gets respected with that, it's like killing 2 birds with 1 stone. It's amazing, right? So boom, right there, filament into the fair value gap, filament into equilibrium, beautiful textbook paper, right? We come in. All right, now we got to look for a 5-minute change of trend. So we got to look for 5-minute continuation of trend. And then we got to look for another 5-minute reversal to fill orders to confirm that our trend is going. All right. So after we get the filament of this gap, this is a really big box. I'm going to shorten this down. Let me make sure all my levels are correct though. I want to lower this down for you guys because this is just like a really big box. I'll lower it all the way. Yep, that high. Okay, come on. There we go. We'll do that. All right, boom. So 1 hour equilibrium filament, 1 hour for value gap filament. Now we got to look for change of trends out of it and respection. So ultimately right here, when market opens, we have market manipulation, money coming into the market. But if we scroll down to the 1 minute time frame is where I saw this opportunity to get in. And I know what you guys might be thinking, like, wow, this was a really risky opportunity to get in. But we had a 1 minute fair value gap right here. Now, one thing that I want to note about trades like this, and when it comes to something like that, is even if we have the 1 minute fair value gap filament, it isn't a really good position to get in, and I'll get into that why. That's only because during the 1 minute time frame, we can look for a lot of fair value gaps to get filled, right? Because the way 1 minute moves is like a little staircase. God damn it, man. But the way that 5-minute moves is we want to look for those good filaments. We want to look for higher time frame filaments, and then we want to scale down for the 1 minute for our entry. So what would be really good is if we had this filament on the 5-minute, and then the filament on the 5-minute will cause our entry on the 1 minute. So we ended up entering on the 1 minute right here. This is where I placed my prediction, my entry. And the reason why I did this is because not only did we get the small for value gap filament right there, then we place our stop loss right above these highs. And then I wanted to target lows all the way down here, our 1 hour draws on liquidity. But I would also say, look at all these 1 minute draws on liquidity that price could well off target. Price could obviously want to target those, right? But let me show you guys better entry. more confirmed entry in my opinion. Right, more confirmed entry in my opinion would be if we take this out, we take that out. Well, hold on, let's keep that 1 minute fair value gap filament. We filled the fair value gap on 1 minute time frame, and we're moving down. Obviously, we got break of structure, break of structure, break of structure, right? And with these break of structures, we know liquidity lies underneath lows, and we want to look for a point of reversal. You want to look for a point of change of trend, look for orders to get filled. But if we look in this red candle spread, there's no fair value gaps to get filled. So this would be a good this would be a good area for equilibrium to get filled. So we draw our Gann box right here from that low to that, from that high to that low, and what do we see? We see the absolute smallest wick, this one. We sweep these lows right here. We sweep them. We come down below them right here. We don't close below them, but we come down below them so we can sweep the liquidity that lies there. Then we can retrace higher, and we can get the filament of equilibrium. So the reason why I like this trade so much is because of its high time frame bias to the downside. If we're getting a 1 hour equilibrium filament and we're getting a 1 hour for value gap filament, and both of those we know it's correct, then we can almost assume that price will want to continue that trend to focus on lower lows, dramatic lows that price could want to target, because that's a dramatic 1 hour low, 652 right there. But we can't enter solely based off these. We can't enter solely based off this. You know why? It's because we have to wait for our lower time frame confirmation that we're going to continue trend to the downside. So we come in and we get that 5 minute filament. So if we scroll down to the 1 minute time frame, let me reset this chart here. If we scroll down to the 1 minute time frame, we can even see inversions of fair value gaps right here. Right now, this is what something I might be thinking. All right, what if we want to wait for another confirmation confluence to get a 1 minute, maybe inverse these fair value gaps, small retracement? But we got to understand that if price is going to come up on 5 minute time frame and price is already going to retrace on 5 minute time frame in an equilibrium position, it's safe to assume that we're going to come and target even lower. So this personally would have been my entry that I would love to execute. Obviously, this risk to reward, this RR, isn't the greatest, but if we look 3.33, 1.68, it's a really good RR. It's a really good RR. The only thing is that's a really high that's resting up there, and I would prefer to put RR somewhere like right here. But all in all, if your profits is double your negatives, your losses, then in my opinion that was good RR, right? To some, that's not how you look, but it's all about measuring it, the risk to reward. So we come in, we fill it, boom, orders get filled right there. Clean red candles to the downside. This is another thing that I want to show you. We have this fair value gap right here, this fair value gap right here that got inversed on the 5 minute time frame. So now we might think, all right, liquidity comes in, we inverse the gap, we get filaments into this gap, why don't we move up? Well, the simple answer to that is, realistically, I can't give you a realistic answer, right? At my point in trading, I can't give you an answer on why I believe price wanted to push down even lower. There's no lows here. There's no lows. But what do we see? We see this whole imbalanced price range that price didn't fill. Price barely filled that gap. So it's kind of safe to assume that, you know, maybe price wants to come down and fill more orders, right? But obviously with that, we hit our take profits, and we don't want to be greedy with that. That's why I loved hitting this take profit the most today. This was a really good one to hit. This was a very textbook trade. And I want to go into why I didn't take this trade. I'll leave the trade up on the screen so you guys can review, you guys can take notes, you guys can do whatever. You guys can screenshot, you guys can review, you guys can play back the video, whatever, right? But I didn't take the trade because of my opportunities that put me in that position. Now, what I mean by that is we don't have to take 100% of the trades we see. I'll repeat that. We don't have to take the trades we see. FOMO. It's all about FOMO, guys. So FOMO, fear of missing out. We don't have to take this trade. because we would rather have no entry than late entry and missed entry and inaccurate entries. All right, because well off this imbalance, because if we miss this too and we get this, and this imbalance can shoot us higher and we can get stopped out right here, you know what I mean? That's us being greedy. That's us forcing an entry, and we don't want to force an entry. If we miss it, we miss it. We have days where we miss it. We have days where we don't miss it. We have days it plays out. We have days it doesn't play out. All I'm saying is that we do not have to take the entries. We do not have to get FOMO, and we can live to trade another day. Trading will come every single day. And what I mean by this is you don't have to trade every day. Even though we were profitable today, we didn't trade. This allows us to keep our equity. It allows us to keep our capital and move it to the next day. The next day, if we have better lineups, if we have better time, if we have better psychology, then we take our trades. So that's what I want to get into today. I'm going to get into a way deeper video right after this one. So stay tuned for that. All in all, this was the trade that I took. And one thing that I really want you guys to take away from this is run prediction trades. So what I mean by that is, at one point I had really bad psychology where it's like, you know, oh man, I'm only gonna place a prediction trade when I enter. Like I'm only gonna, like, this is a full prediction trade right here, but I'm only gonna do this if I actually place money on the trade. And we don't have to do that, because that's bad psychology. That's yourself tricking your mind into saying, all right, we have to bet money to make a prediction trade. No, we don't. That's the same thing as paper trading. Paper trading is all prediction trades. This is all prediction, right? If we place money on it, that's a gamble. You know, we get in late, that's a gamble. We force it, it's a gamble. So when you guys are in positions where you can't trade, think about it in your mind, see if your confluence is aligning up, and just throw it on there, right? You won't win money, you won't lose money, but it's your prediction trade to check if your psychology is right. Because all in all, you can't have good trades without having good psychology. So yeah, run your prediction trades. Don't be too overthinking it about, oh man, I'm not placing money on it, so it's not a real trade, so why should I do it? It's more or less teaching yourself the ability to not have FOMO. It's teaching yourself the ability to trust your confluences when you don't place a trade on them. And if it doesn't work out, it doesn't work out. You know, if I wanted to get out right here and I didn't want to hit the take profit, that's bad psychology. Because we didn't place any money on it, it's the same thing as a paper trade. We don't have to risk getting stopped out, and we don't have to risk hitting take profit. If we hit take profit, yeah, that's cool. You might get FOMO because, damn, I really wish I took that trade. But instead, think about it like, damn, I had really good psychology and I really did play that trade and it worked. So now you two-stepped your psychology, you two-stepped your confluences, and now you can go into the next day and the next week more accurate, more confident in your trades, right? So that's all for the video today, guys. Don't get FOMO. Have good psychology. Prediction trades. Thank you. Peace and love always. See you in the next one.